Welcome to Vol Stars, where we talk everything markets and those who make them. Today's episode brought to you by Little Richard's Head Wax. Deep down, we all have some desire to channel our inner evil badass like Lex Luthor, Dr. Evil, Rupert Murdoch, or Walter White. But once shaven, the fantasy of the god of war laying waste to the willing harem of beautiful concubines is met with the reality of a weak chin, thin neck, grating voice, translucent skin, and beta energy. Take, for example, Stephen Miller, advisor to Donald Trump, whose head is so shiny he might as well be irradiating you with gamma rays. A look so toxic that a high school quote stating, "Am I the only one who is sick and tired of being told to pick up my trash when we have plenty of janitors who are paid to do it for us?" seems more like a foreshadowing of future baldness than a cogent statement about human labor dynamics. Are you someone so insecure in your own failed gene pool that you attack the stronger ones? You need Little Richard's Head Wax, formulated with the perfect blend of matted hues and subtle shades to reduce intense glare and soften your clown makeup complexion. Not too white, but also not too not white. Wink. For those not ready to go full Donald Trump Oompa Loompa orange, but still would like the sophistication of Heinrich Himmler, try Little Richard's Head Wax today, because nobody really likes a shiny penis on national television. And finally, by GammaStrike.com, providing actionable real-time data for every type of trader. You've tried the rest, now try the best. GammaStrike.com. I'm Jay Fresh, and I'm joined by our co-host Gherkin and
Breaking
Dork.
news.
All right, let's get into the market overview.
Yeah, well,
So-
Trump decided to do extra bonus tariffs after he decided to do some tariffs, and now he's doing tariffs.
What happened was the Supreme Court knocked his tariffs off the wall, and he said, well, what are you going to do about it? 10% tariffs across the board. And then all of the geniuses on Twitter, where Trump spends all of his time, went on and on and on about how, well, actually, you could do 15% under these rules. And so Trump's like, well, shit, I should have gone 15. Why didn't I go 15? So he went 15. And now everybody's talking about the rules in which he could go up to 50% if he wanted to. So I feel like they're just all egging him on.
That's cool.
Okay, can anybody tell me, where do I go to figure out what the tariff is on any given item? How many people actually even know what the tariffs are on the things that they're purchasing from overseas? I have to imagine they're just kind of like, well, we're going to see what what they say at the dock when we go to pick it up, what price tag they're going to slap on it, and we're just going to be like, all right, I guess that number makes sense.
Yeah, so I guess that's actually like an important aspect that I haven't seen discussed a lot lately, is that these are not structurally identical to IEEPA tariffs, although effectively they do the same thing. One is an import duty, the other is a tariff. There's these are not these are not they cannot be structurally applied the same way that IEEPA tariffs were. So the IEEPA tariffs, if you guys don't know, that was what was struck down by the traders in the Supreme Court. How could they do something so wildly un-American like fix our destroyed global trade? But
it's kind of outside of the scope of their job, right? They're just supposed to interpret laws.
Yes. And as usual, our president was breaking one. Naughty. But basically he had no power to enforce those tariffs or put them into place. Power of the purse is Congress. And it's effectively taxation without representation, if you think about it. It's a consumption tax being forced on the American public without the vote of our representatives. So there's a number of reasons for the Supreme Courts to strike it down, but they really stuck with the main one, which is that they just weren't permissible under IEEPA, and they didn't outline any recommendations for refunding those tariffs. Basant has pretty much said that he's just gonna sit on them. But what the president does have is under I think it's like section 122 of the Trade Act of 1974 is he has the authority to impose a 15%. I think it's a 15% cap. That's the statutory cap, and he's done that now over the weekend. 15% import duty for 150 days until Congress has to vote to extend it. The interesting thing about this is, like I was saying, one, you can't all the goodwill he's gotten and his family's like company that he got like pushed through Vietnamese regulation, and and then he lowered their tariffs by 10%. All of that goodwill and all of that ability to influence different governments around the world is lost because Section 122 tariffs have to be applied broadly. There is no exceptions. And that means all of the trade deals that he's previously negotiated are going to change. So all of these great trade deals where
two
people
trade deals that we have and the hallmark features of them.
Oh, I think we had one with like South Korea, right? Like an officially signed one. And we had one with I believe one with Vietnam. There might have been one with Indonesia
I don't know why I'm
as
testing
well. Okay.
I was just kind of
Anyway,
saying,
there
yeah,
are a
maybe.
few that are inked. You're correct. There are several that are just have already been up in the air. Those are even more up in the air now. And now Trump loses his ability to strong arm any small governments into, benefiting himself or his family specifically or his friends. And now just has to broadly apply the same tariff to everybody, which means that all the levers of negotiation that he was so enjoying pulling are gone. And now we're on a 150-day cycle for these tariffs. So you can impose the duties for 150 days. Congress can vote to extend them. You get another 150 days, and then Congress has to vote again. So these are not structurally the same. And then also, as far as the logistics go, bringing those items into the port, that's going to have to change. And like since the like Section 122 tariffs they've not been used heavily by any administration, if maybe ever since they were instituted, um, except in times of like conflict and stuff. These are going to be difficult to get all the structure and all the paperwork and everything flowing in the right direction again. And so it's likely we're going to see a little bit of a supply hiccup, the same way we saw post Liberation Day as the first round of tariffs were imposed. Except structurally, IEEPA tariffs are probably a little bit easier to get into the system because there's actually there has to be an accounting of all of this, and all of that structure needs to be put in place before goods can start flowing again, and that's a bit of a problem. So I mean, I looked at the Budget Labs like state of tariffs estimates, and it looks like we were around like a 16% global average rate, which after the ruling went down to about 9.1%, and then after Trump announced the 122 tariffs, we went up to like 13.7, and that's with the 15% version. What the decision doesn't affect, however, is any Section 232 tariffs that are those are the commodity tariffs that he's done, like steel, aluminum, copper, autos, trucks, buses, lumber. Those stay. So those stay in place, but the IEEPA tariffs, which were all over the fucking place. Some countries were 30%, others were 10, some were 15, some were 18. Those are all 15 now. So it flattens all of those out, but the sectoral tariffs stay in place. And then the Section 301 tariffs against China, that's going to be weird. 301 is really problematic, and Trump brought it up in his speech, but there is a significant amount of like discovery and public comment and investigation that has to go on before a 301 tariff can be enforced. they're very legally sound, but they take forever to get into place. So it would be those would be more durable. I'm sure that's what the administration is going to reach for, but I can see them getting burned out on administrative red tape trying to get all of those in place before, even some of them in place before midterms would be a huge task, and probably nothing significant by then. So I think the main focus of all of this is going to be on the 122 tariffs. Um, how long they're going to be enforced for, and if he's going to try to mess with that. And then also the big question now is what's going to be done about the tariffs collected that were deemed illegal.
Yeah, and so, there's already been a lot of chatter from the Trump administration themselves on this issue. I mean, Donald Trump wants to drag his feet and basically never pay it back. I mean, he says, I guess it has to get litigated for the next 2 years, then said it could be the next 5 years. So he just kind of expects that it's going to become such a hassle that nobody's going to want to see it all the way through. And then you also have Scott Besson saying that they have enough cash on hand to refund people, but the process could play out over a year or more, and he really doesn't think that they're going to actually pay it back. So I think yeah, probably. I mean, sure, you could sue the government, right? Like Costco
What
and other
happened to
people
our
have
tariff
already.
dividends? I thought they were giving us
Did
that
you
money back
actually ever
anyway. Now they want to
believe?
keep it.
Did you actually believe that we were actually going to get that? No. Here's
Do we
how it
actually
works.
believe that the Supreme
When the
Court is full
tax
of
was
traitors?
when the tax was imposed, the consumers had to pay the tax, and now that it's being reversed, we're going to give all those taxes to the companies that pass them on to us. That's capitalism.
Okay.
But yeah, so
Interesting.
like Costco's already sued the government before this decision just to kind of get in there, slink in there early to get at the top of the pile. But it's like what does this even look like? How does it get litigated? How long is this going to take? I mean, unless the Trump administration actually says we are going to actively create a process to redistribute back all of these tariffs that were paid, it's just not going to happen in the next few years, I think.
Maybe we could just get another round of PPE loans against the tariffs.
Yeah, I mean, I suppose you could, sure.
Because you
So
know who
another
needs
interesting
money
thing,
the most? Large business owners.
yeah, most of whom who are Congress critters.
How could they survive without the welfare of the people?
It's true.
Yeah, how are they going to pay their workers when they never allowed their workers to actually stop working and continue to output from their business? And then they also got money to pay them if they didn't need to pay them because their businesses were still operating. And then they forgave those loans, no questions asked.
Yes, this is what I'm hoping for as a business owner.
Oh,
Yeah, well,
shit.
I will very suddenly own several businesses, and I will need to
Yes.
keep my employees, all of them, paid.
Are all
And
of your
then,
employees going to be you?
And your
yes,
cat?
Yes.
yes,
Nice.
and everybody, I'm gonna have so many employees. There are gonna be so many dead people in my company that all need
It's
to
going to
get their
be so
paychecks.
hard to not have more employees with less illegal aliens now, though. I can't believe
Yeah.
the administration didn't think of that.
Oh
Oof.
yeah.
Yeah, so another thing regarding my question about what are the tariffs currently, Ron pointed me to the trade.gov FTA tariff tool, which
Ooh.
looks like a very fun tool to mess around with. I've only touched the surface of it, but I immediately gravitated towards the country of Colombia and specifically looking at the HS code 01019030, which description is live horses, asses, mules, and hennies
I
imported
found this
for
one.
immediate
What
slaughter.
about Neswa?
I don't know what that is.
Oh, okay.
And apparently the tariff rate's 0 through 2031. I don't know what that means. Does that mean that now the tariffs on it are 15%? Where am I going to
Yes.
get my hennies?
The liquor store?
It means not elsewhere specified or included.
Oh.
Or it's the primordial Greek goddess of islands.
Wait, hold on. So I mean, that would have to imply that like there are some subclasses of asses that could be included in another agreement, but that doesn't include all asses, just some asses.
Correct.
So
There's a
now
lot of
my
different
next
types of
question
ass.
is,
There's the smart ass, the dumb ass, dad ass.
Does Stephen Miller know about the import duty on purebred breeding animals?
Oh shit.
I mean, I don't think he's been in that market for a while. Not since Epstein offed himself.
Oh
boy.
god.
That went dark. Why'd you have to get so
Yeah.
dark, man?
Well, I mean, it's also conspiratorial, right? Because he's like Elvis now. He's still alive.
Ah, yes.
Yeah, all the photos of other Jewish people in Israel.
Hmm.
Didn't think about
All
that.
right. So tariffs. Is it so he said active immediately, so I presume that this is now ongoing, or do we get the gentleman's 2 weeks before he somehow tacos it? I don't know. He can't really taco this, can he?
Mm.
I mean, to take off the tariffs, he's got to do it all, right? Because of the rule that he's invoking. And it would basically be an admission that he made a mistake on tariffs in general, when that's been like one of the biggest things he's been pushing for like well before even his first term. So we're basically stuck with higher tariffs than we had before.
Yeah, and actually that's interesting because that matters to the market as well, right? I mean, that's a broad import surcharge and a weaker US dollar is going to mean that there's less cushion in the FX markets, and higher landed costs are going to have a faster pass through to consumers. So anywhere where we weren't seeing 15% tariffs, the consumer is now going to feel that, right? And for those of you that don't know how tariffs work, you pay them every day. Me and you guys,
No, I was told that's not
pay
true.
the tariffs. That's bullshit. You guys pay the tariffs, and every item you buy that comes from another country, you are paying the full amount of those tariffs, probably plus a little premium because of all of the paperwork that has to go into managing those tariffs. So you're paying for the administration of the tariff and the tariff itself. As a matter of fact, the New York Fed released an estimate recently that 94% of 2025 tariffs were borne by the US consumer. So all of that money that Trump doesn't want to give back, it's supposed to go in your pocket. However, if they do refund it, it will go right back to the corporations that already charged you for them. Effectively giving them double, and you got, well, we used to throw tea in the ocean when we got mad about these things, because you got taxed without your representatives voting for it,
Whoa,
which is
whoa,
like
whoa, whoa,
having a
whoa.
king.
I mean,
anyway,
maybe we'll get into that if something happens during Trump's third term, but let's not get crazy in his second one.
all right, fine, yeah, duly elected and all.
You mean
But
his
I will
third
say
term
that
as weekend at Bernie's?
122 tariffs are going to be, the impact in inflation is going to be felt immediately, and it is likely to be higher. So you're talking like, I think the prior impact to consumer pricing was 0.5 to 0.6%. We just recently had a very hot PCE print, which we'll get to in a little bit. But this is probably going to be around 0.8 to 1.0. So this is going to be pretty, like, almost double what we're seeing in tariff costs now. And it's going to be felt, it's going to be felt at the pump. It's going to be felt on consumer goods of every style and shape and size, because we don't make any of them. So those all have to come from other countries, and previously we were managing some of those costs by using the IEEPA tariffs to lower tariffs on items that were in high demand, and that way you could create some kind of price control. With 122 tariffs, that is not an option. These have to be applied exactly the same to every product, every item that comes into the United States, 15% surcharge. So theoretically, that just means everything's going to cost 15% more than it should. Because importers are definitely not going to lower, or exporters
No,
from
yeah,
other
they'll just
countries are
lower
not
their
gonna.
margins. They'll
Oh,
go to
yeah, they're gonna
yeah,
cut
Yeah,
their
they'll
margin.
eat that.
Yeah, of course.
yeah. This is an efficient market, Kirk. There aren't any monopolies or oligopolies where they can all collude together to make sure that everything looks good in their own little
If
fiefdoms that they've
China
carved
stops
out for each
exporting
other.
plastic crap, Amazon will go out of business in like 10 weeks.
Yeah, that's true.
So, um,
Which ironically has made me use Amazon a lot less, but somehow they're still getting more money. I don't know.
this should also
Yeah,
push up unemployment, by the way,
I mean,
a little
is
bit.
anybody still watching those numbers at this point?
No, but that also means that gold's now in a better position again, or an even better position than it was previously, because Europe's already pushing back against this. They're saying that their trade agreement with the US had carve outs for specific industries, and now switching regimes to 122 breaks the prior trade agreement. So that's now invalid. So you're going to go through all of the trade agreement turmoil that we went through last year all over again, because now everything is uncertain again. And until we can get 301 tariffs in place, which could be years, we're definitely going to get a lot of stress between us and the EU, and between us and China. And then there's also, the global court, or international court of trade, that's going to rule on some of this stuff now that the Supreme Court has struck down the IEEPA tariffs, and that could result in significant fines for the US. If we don't agree to pay those fines, then there can be economic repercussions, and so this just opens all of that up again. And the best thing to have done would have just been accept the L and move on, no tariffs. But Trump can't seem to do that, and all of the promises that tariffs were supposed to bring, like Trump spent most of 2024 in the election cycle talking about, like, um how the US trade deficit was somehow this indicator of how much other countries were ripping off the United States. And the trade deficit moved down 2 basis points in all of 2025 with tariffs in place. But Wednesday, Trump said the United States trade deficit has been reduced by 78% because of the tariffs being charged to other companies and countries. And that's how his all caps post began. However, it's factually incorrect. It was
They
not
call
down
that a lie.
78%.
Well,
It
that
was,
happens. That'll happen to anybody every once in a while. He doesn't consistently lead with lies and half truths, and he's a good guy. Just admit it. He's a
okay,
smart
well,
fellow.
and then one other thing that he decided to mention on social media was the economic growth in the fourth quarter of 2025 was 5.6%. However, economic growth in the fourth quarter of 2025 was 1.4%.
Was he talking nominal year over year? Probably.
He said,
'cause
quote, "I'm very
nominal's too
proud of
high.
it. 5.6%, we have a GDP of 5.6 despite a shutdown."
Yeah, he must be talking about nominal.
Yeah.
He's ignoring the deflator of like it was like 3.4 or 3.7. I can't remember. Okay. So we're talking about all these tariffs that are going to hit, the consumer, of course, right? Because why wouldn't it? But then, I look at the stock market and what's been happening over the last 6 months, basically, is there's been some evidence of a rotation out of information and into things like consumer, um,
Staples.
essentials. Yeah,
Yeah,
and
there's been a lot of sector rotation, not just consumer staples, but
yeah, industrials and other things as well.
yeah, producer manufacturing. Well, this is what we discussed a few weeks ago, and I think a few weeks before that, in regards to how we were going to see the dynamic in tech earnings shift. We're going to start to see some forward PE compression in a lot of the tech stocks because the money's upstream now, right? All of the big hyperscalers and all of the big tech companies, they're spending and spending like crazy. They're spending all of their cash flows, and all of the money's now going to the places where their money's going, right? As far as investment, and so
Yeah.
you're starting to see, you know, things like in the Nasdaq 100. ASML up 29% year to date. MU Micron up 45%. AMAT up 40%. But then you do have some weird ones. You have like Pepsi and Coca-Cola are both up about 16% this year, 15-16%. Walmart,
Oh,
Costco.
weird.
So
Yeah,
we're
those
getting
are
we're
weird
getting
to me.
we're getting kind of like, yeah, well, we're what those are consumer non-durables moving. And this flow of money into transportation, into distribution, into health tech, into retail trade. These are that rotation is part of a economic shift, right? So or a lot of people are expecting GDP to kind of collapse a bit, moving us closer to recession. That's like a recession bet when you start to see money pulled out of speculative risk assets and people start piling into like dividend distributing kind of boring fucking companies, which
Yeah, but
have
but there's I
Like
mean, if
consumer
it was a
staples.
recession bet, wouldn't they be a little bit more discerning of the PE ratios of the companies that they're rotating into? I mean, Walmart PE ratio is disgusting right now. It's not
yeah.
a good recession buy.
No, it's not. But that's kind of what happens when recessions or economic declines are expected. People rotate into those, but very rarely do any consumer non-durables or things like Kroger and shit, like retail trade. Like very rarely do those actually outperform. They kind of just, I mean, they outperform by staying flat. There's so much rotation into them, and they're like already overvalued that their price action tends to flatten out. And for a while, they kind of just protect your money while feeding you a dividend. And then
Yeah,
they
well, I
collapse when
mean,
the economy takes back off again. But
it's been kind of interesting though because since basically the beginning of November, end of October, when people started rotating out of a lot of um, IT and SaaS and all that stuff, the Mag 7 was at like a little over $20 trillion, or yeah, $20 trillion in valuation, and now they're sitting at 18 and a half or so. So they've lost something on the order of 8 to 10% of their market cap valuation. And
yeah,
at the same time, the equal weight S&P 500, which kind of just includes a lot of those other things that people would be rotating into,
Ugh, gross.
w- went from, let's see, 190 up to now to 204. So it went up 10%. And we basically have stayed flat.
yeah.
So everybody just rotated out of the Mag 7 and into everything else.
I mean, Russell's also seen some very significant improvements up until like Jan, and then it kind of flattened out from there. But
Yeah, that one seems excessive as well.
yeah. Yeah, it's very likely that the problem with like defensive sector rotation is it tends to fail, right? I mean, people do it in order to hedge. Do it in order to hedge like the end of that part of the economic cycle, right? Like the lofty valuations and all of that are going to end, and the economy is going to go into a period of large capex and infrastructure build out, and things are going to slow down from a balance sheet perspective, but otherwise stay stable. The problem is actually when the euphoria ends, people tend to just freak out. So that hedge
Yeah.
like almost never works. I mean, those companies recover faster. So they are somewhat shielded from downside because those companies just have really stable balance sheets. They don't have a lot of debt. Many of them have paid dividends for like 30, 40, 50 years. Um, and people during a crash and after a crash and things like that, people will pile into those stocks, and that keeps their
Right. They'll
valuation
pile in at the
stable.
bottom, but right now the greater fool theory math isn't really mathing so
Yeah,
well.
yeah, it doesn't. So I think the rotation's largely, a bad idea, but also, just indicative of persistent uncertainty. When
How
uncertainty
much
almost
we don't
always
want to hold dollars.
yeah, and uncertainty almost always turns into fear. So, that's also, a fairly significant aspect of this.
Well, I mean, that's another thing I wanted to talk a little bit about was America's number one fear indicator, because there's not really any other time in this list to talk about this. The
Are you talking about
VIX,
the
or
CNN fear and greed indicator?
yeah, which is largely based on the VIX. But which is largely priced by a basket of put and call options on the SPX index, 30 days out roughly. So I'm looking at all of the contracts on the market using options macro tools from GammaStrike.com. Shameless plug. And we did have an OPEX this week, so it's probably worthwhile to talk a little bit about it. In terms of contract values were little changed after this expiration. So we didn't lose a ton of open contracts. Usually, if you're looking for like some sort of deleveraging event or something about to pop off, right? It's flat. It hasn't been growing all year, which is concerning. It kind of did the same thing last year, but it hasn't dropped off sharply. What did drop off somewhat noticeably was that most of what dropped off on Friday was delta on puts, and most of that was actually higher leverage than the remaining puts on the market. And so you have this situation where those higher leverage puts tend to be the ones that are farther out of the money because they're sold. So it does kind of look like a bunch of sold puts have kind of fallen off. And meanwhile, if you look at the longer term trend of the aggregate value of puts on the market, I mean, they've just been steadily climbing since around September or October of last year, and they continue to march upwards and to persist. It's not just like an up and down, it's a slow build. So it is looking pretty gnarly out there. I wonder if we will see even more volatility than we've seen in the past this next week, because it looks like, a non-zero amount of supportive sold puts have closed throughout this week.
Yeah,
And I
I think
and I think just in general, I mean, obviously this increase, the slow, steady increase in put values has coincided with a slow and steady increase in VIX. I mean, we have like VIX when it recovers, or when it kind of bleeds off a little bit because it got overextended, goes down to like 19 and has trouble closing a day under 20, right? I mean, that is an elevated VIX. And so people are definitely growing concerned in the longer term. And I don't know what it'll take to, get them to flip the other way. I mean, everything that I'm kind of seeing, if you look at like the private credit and private equity issues, getting over levered and people wondering where the revenues are from all this AI build out. And then I saw an article today from, I think it was either the Information or Financial Times, I don't remember, where apparently Oracle Blue Owl and Oracle, SoftBank, and OpenAI are struggling to come to terms over like how they're gonna. I'm not really sure. It's like who owns or what the agreements are actually going to be surrounding all these data centers that Oracle and SoftBank are on the hook to build for Stargate, and they just haven't. They haven't actually like even hired the people to build the stuff yet. But Oracle's sitting on all this debt that they're going to have to pay interest on, and SoftBank is levered to the tits on all their ARM holdings and everything. They got downgraded. It's like, don't you guys need to be building yesterday? Like you're all super levered and you haven't even staffed the teams that are going to build these things, and you're fighting over what exactly? You took on all this debt before you inked the deals and got all the fighting out of the way? What is going on here? So I don't see, this indigestion in the market easing anytime soon, and everyone's just like, this is a lot of money. And now you're asking us to bear the burden, and things don't seem to actually be going so great, right? I mean, it's like, it's one thing to just get all your information from a bunch of CEOs getting interviewed by people in the media that are so excited to talk to a CEO that they would never push back at all on any ridiculous thing they say, like Sam Altman this week saying, oh, it costs a lot to train these models, but it also costs a lot to train a human. You have to feed them with food for 20 years. It's like, what? What? Are you an idiot? Like, someone just needs to ask him. It's like, are you actually an idiot?
Nope.
Anyway, so yeah, I see.
Have any of us eaten $600 billion worth of food?
No.
How
I
much
haven't
is the
eaten a
cost to
Nobu
end
that many
global
times.
hunger? Hold on.
I don't know.
Okay.
Well,
So that's a loaded question, though. World
Yeah.
hunger is very complicated to solve. It's not just money.
Yeah. Once you increase the aggregate demand of all of those goods, they're going to skyrocket. It's probably going to take all the money to end world hunger.
You would need to
Estimates
end.
on
You need to
world-
end global conflict first, and then you can end
Ending
global
world hunger by 2030 generally range from $40 billion to $260 billion dollars a year.
Huh.
But that's
Okay.
how do you can't
The
end
UN
hunger in
World
certain
Food
regions.
Program suggests $40 billion annually.
But how do you end world conflict first so that way you can actually get into a lot of places where people are indeed hungry?
You just use the US military to let you in.
You just call the food that the food drops that you drop from the plane, call them bunker busters, and we'll get them wherever you need them.
Ah.
Yeah.
And then we drop actual bunker busters on the bad guys who are going to steal the food anyways.
Yes.
Whoever we
the bad
decide are the
guys.
bad guys.
Right.
Yes, the bad guys as decided by generic Disney morals and ethics.
I was thinking the Family Guy scene where he's got the little card. Where the
Yeah,
cop's got the card
you
says
know,
okay, not okay.
now who's being dark?
Was I ever not?
All right. So we've talked about the market. We've talked about tariffs. Now we have to talk about inflation.
It's transitory,
So-
bro.
Well, we'll find out. I actually didn't look. I don't know. I'm assuming I didn't win this week because they would never use the word transitory.
None of us won.
We did get the Q4 GDP and personal spending data and things like that. What's interesting is that the deflator was high. It was, I mean, somebody can look it up to confirm, but I think it was either 3.4 or 3.7, something like that. It was well over 3%, which is interesting because inflation is under 3% as measured, right? So there's some interesting misalignment there. But also, I mean, there's in the income and spending data, it does look like the US consumer is doing a bit of dissaving. They're saving less money than they normally do, a little bit, right? Usually they spend 95% of all the money they make. Now they're spending like 97, which is actually quite a large change. So they're spending almost 2% more than they normally would just to basically buy exactly what they were buying before.
Yeah. I mean, it's pretty. I think you kind of hit it.
But yeah, I
It-
mean, as far as inflation goes and rates, I mean, housing's still in the toilet, mortgage rates are still high. Does anybody actually reasonably think that we're going to get down to rates that are going to fix the structural imbalances that exist right now? I
I
mean,
mean,
even in the best case for us, assuming that nobody is levered into any carry trades at all, like the lower bound is Japan, right?
yeah.
Yeah, what is the Japanese 30-year bond at right now?
I
Let
don't
me
know.
find out.
I'm gonna look it up.
Yeah.
It is at 3 point.
3.31.
Yeah, that one.
There you go.
So yeah, that's the floor, and we're like already almost there.
No, it's at 3.3.
Oh.
Yeah. Well, 3.307 if we want to get exact.
Ooh. Yeah, actually. That was weird. It's giving me a different value on the weekly.
Huh.
Hmm.
It's about
Okay.
3.3. Nobody
Yeah.
cares.
Yeah.
Yeah.
I mean, they should.
Well, sure. I mean, nobody cares about that second digit. Okay. So I mean that's kind of the lower bound. That's not low enough to fix the issues we're having,
Well, you know
right?
that to fix the issues we're having, the real question isn't how low is it, it's how high is it.
Sure. But we're not going to like that fix because that's not a fun fix for anybody. That's called the hens coming home to roost.
It's called
Should we talk
the
about the
economic
fact that the
bazooka.
Fed probably should raise rates and the front end is already quite tight? We're already having like some serious liquidity issues or short-term funding.
I think we're kind of getting into a little bit of the Japanese dynamics where I mean, a big reason they have indigestion with raising further is because they have so much debt that the interest rates becomes a big problem. We're kind of in that position too. I've been very vocal about my crazy theory that I think the Fed cutting has been recessionary because it is cutting off free cash to capital.
I
And
agree
I
with that,
mean,
by the way.
my confirmation bias is being heavily petted right now as the economy's slowing down. Obviously, it's never one factor, but the fact that I was conveniently correct in like the short-term outcome, certainly confirms my bias, but I think now it's like if you ask the Federal Reserve, should you raise it? Like if inflation goes up, they're going to be very resistive to actually raising it because of fiscal pressures from, bully president and the Treasury, who they've been working very closely with to make sure that inflation is not solved. Um, you know, they they're not going to want to blow up our deficits even more, and it might actually even have the adverse effect of raising inflation.
Yeah, have you ever thought that like one day they were just sitting around and they were like, "Oh man, like look at all this debt we've issued. I wonder how we're going to pay the interest on it." And then somebody came in and it was like, "Oh, what if we just create tariffs and charge like double the rate that we have to pay on interest, and then the American taxpayers can unwittingly cover our fiscal irresponsibility on our behalves. And then what if they found out that we're all broke?"
Yeah. I mean, that's kind of what's happening. And I think it's part of the reason why Congress hasn't really done much to push back on the tariffs because, deep down, they're never going to say this out loud, but they're kind of glad that Trump is solving their spending problem for them by raising taxes on people and doing it in a way that is sort of, people don't. People are just
Illegal.
more confused. They don't see like, well, sure, it's illegal, but who decides what legal is? the people who aren't doing anything about it, right? Like it's we talk a lot about the Supreme Court. They're not the ones that really I mean the people who can determine whether it is legal or not are the people who write the laws, who could simply write a law or vote to retract a law that gives their power of the purse in some form over to Trump, right? I mean, Congress gave him that power. He's interpreting it in a way that Congress is not responding to. And I mean, the Supreme Court can say whatever they want, but that is sort of just an implicit admission that what he's doing is legal.
You
So,
make some good
I mean,
points.
you've got this situation where yes, they need this revenue. It's slowing things down, right? Um, and they're also lowering rates, which is slowing down the free money printer to capital. So it's just everybody's kind of getting hit. Capital and labor are seeing reductions in their free cash to spend, and that's starting to show up in a lot of places. The one place it isn't really showing up a whole lot is the unemployment data, which I think we're basically at a point now where the amount of people who are entering the workforce sorry, let me say this another way. The amount of people who are entering the unemployment pipeline is equal to the amount of people who are dropping out of the labor force and no longer responding to surveys. And so you get this declining employment to population ratio with a flat unemployment rate, because those two rates are balanced. But it's a clear outflow of labor from the labor market that just isn't picked up in the rates. So yeah, things are going to be fun.
And on one
Anything?
more, yeah, actually, one
Go
more
ahead.
macro point, as long as we're talking about prices, war with Iran.
Oh God, we didn't even talk about this yet.
Yeah, it's important. I know a lot of people are like, Iran's like a desert and they've got no money. But they actually have like one of the largest armies and infrastructures of most Middle Eastern countries. They're quite big. They're backed, unilaterally by China and Russia. And they are not friends with Israel or the US, obviously. But they have control over something that's very strategically important. That's the Strait of Hormuz. A very significant amount of the world's oil passes through that strait. And you get a bunch of shit that's really boring, that comes up anytime there's escalation of conflict in that region. And the big thing is if, the Strait of Hormuz closes, or if there are brief disruptions, which there inevitably would be in the event of any type of full scale attack in Iran, then, the first thing that happens is that shipping costs and insurance costs on shipped items go up, and they go up substantially. And you can't, the per container cost increases dramatically, effectively adding another layer onto imports to the US, um and then also US exports, because the cost will go up unilaterally on both sides. um the American consumer is going to have to pay. And then you get risk premia on oil. The Strait of Hormuz, like I said, a big chunk of the world's oil, I think about 25 or 30% of all of the oil that's shipped by tankers, which is about 20% of the total global output of oil, passes through there. And that means that, you know, you're talking risk premium on oil per barrel that could increase 20 to $120, right? Depending on the state of the conflict. If there's infrastructure damage, in the Strait of Hormuz, so Iran like attacks that, then oil prices can spiral out of control, and you could be looking at 120 plus a barrel in a very short period of time. And as we know, we've discussed many times, the price of oil affects the price of everything. And then you have oil increase in an environment where the dollar is falling, and it can increase in price exponentially relative to the dollar.
Hey,
And so
Gert,
this is what?
I have a question for you.
Yep, shoot.
What do you call a cow brothel in the middle of a river?
Hormuz.
The Strait of Hormuz.
Ah,
Get it?
yeah, nice. I'm glad that everything I said, that was the response.
Yeah, you're just like talking or just like Hormuz, 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 Hormuz. Also, I put up a picture in the chat of Iran showing snow-capped mountains and green fields full of life, cattle,
Are those opium poppies?
probably.
Nice.
Because you said it was a desert, and I feel like most people think it's a desert.
They do. Yeah.
They call it the cradle of life for a reason, and down there.
Yeah.
So do we think that this is more than just posturing?
If it's not, this is the largest U.S. deployment of military forces
Yeah.
to a region without a strike in the history of the world.
I mean, so I feel
Oh.
like there's a
you
simpler way
guys
to
not know-
negotiate with Iran. You just sit down with him and you just have the pistol in your lap.
We have like
pointing at him.
40% of our air superiority power right around Iran right now.
Yeah. No, you guys are confused. Carnival Cruise Line, their newest ship is called the Armada. So Carnival is just
Ooh.
their ship, the Armada, is currently cruising near or adjacent to the Strait of Hormuz.
I mean, this is equivalent deployment of forward U.S. forces to Desert Storm or the Iraqi War in 2003. Like, it's on the same scale. So I think if we at this point, if we don't do something, we've just wasted a shitload of money, which will drive up inflation anyway. So we might as well just go for
why
gold.
did we do it? It's like that episode of Always Sunny in Philadelphia where Mac gets ripped. It's like after his fat year on the show, and he just gets absolutely ripped. And they're, the gang's coming up with some plan, and they're just like, all right. And then, I'll come in and just like show off all my muscles. And they're just like, no, we don't need you. We don't need your muscles. He's like, well, why did I do it? Why did I get jacked?
Trump's just waiting to time the attack in Iran with the testimony of Bill Clinton about the Epstein files in front of Congress.
I want Bill Gates up there in front of Congress.
Same day.
Is it the same day?
No, I'm just saying he'll attack on the same day.
Oh, okay. Yeah.
I see.
I want Billy and Bill, just a whole day of bills. Just like go through the Epstein files, take all the names and then rank them alphabetically, and then each day, so there's like a whole day where like everybody named Bill.
Just ask them how many STDs they've given their wives. And Hillary is going to be able to answer none.
Ooh.
Because I don't think they've had sex since they had a child.
Wait, that could be our stupid bet this week. We'll never get the answer though, but maybe we will one day.
Ooh.
Who gave more STDs
Melinda
to their
Gates
wife,
is going to come
Bill
testify?
or Bill?
Shit.
You have to admit, that's a good bet. If we ever actually got the answer.
I don't think we'll get the answer, much like our last bet.
Let's write some contracts on Kalshi. We can pay for it by betting against the return of Jesus Christ in 2026.
Bill v. Bill? And we just price... Well, no one knows who they're voting for, though. Can we set it up that way? So you don't know if it's Bill Gates or Bill Clinton. You're just voting for Bill 1 or Bill 2.
Yeah, the fine print. Yeah, so we win either way. Unless both bills gave an equal amount. I don't know. But
I mean,
yeah, I don't know why everybody's wasting their time trading equities and stocks when you could just be shorting contracts on whether or not Jesus Christ is going to come back in 2026.
Seriously.
fucking. Did you guys hear the Kalshi guy talking on Bloomberg? It was pretty
All
fascinating.
those people are.
Although I will say,
I can't listen to those people.
if Trump is the Antichrist, it's more important now than ever to
Peter
protect
Thiel.
path into Israel.
Peter Thiel is the Antichrist, and we
what's it called?
know
What's it called
this.
where all the Christians get sucked up into the sky and leave everyone else to eat shit.
Oh, rapture.
Yeah, rapture. Why can't that actually happen? Think how great the world would be afterwards.
I mean, it would be. I don't know. This narrative has been done. There's a whole series, like I think it was a movie. They
I
all
think
looked
that
into
Girk
what
is
Dogma?
discounting the fact that he would get raptured too and have to hang out with these
No.
douchebags.
I'm
not-
talking about
what?
serious.
How dare you?
Serious media.
I was saying that the Supreme Court were traitors, ironically, not to get into heaven.
Well, you're just gonna get thrown up there as a sick joke. That's what's gonna happen.
Damn.
There's no escaping it now. But yeah, listening to the Kalshi guy talk on Bloomberg was fascinating. Him basically being because the hosts were actually kind of leaning in on him about insider trading and how
That's it.
shady as
Left
fuck
behind.
Kalshi is.
Question, philosophical. Do you think that we could choose to leave heaven? And if not, would we be prisoners?
Ooh.
Technically.
I mean, I think the whole idea of heaven is it's so perfect you would never want to leave
Because of the implication?
because of the implication.
All right, God rape jokes, got it. Are we out of listeners now? Okay.
No, it's nothing.
All right.
They're safe in there. Okay, nothing's gonna happen. It's just the implication.
Let's move on. So we have a very special earnings this week. The entire S&P 500 has their official earnings this week.
That's correct.
You're talking about Domino's Pizza, right?
Yes, correct.
I thought you were talking about TJX.
Oh. I mean, yeah, that one's pretty good.
I'm trying to look for a better one, but yeah. No, I think Domino's Pizza wins that one. Hims and Hers. Does anybody still use Hims? Is that still a thing? I feel like that was
Men will always purchase boner pills.
Wait, didn't
Jacob.
Hims and Hers get sued for some reason?
I don't know.
I think they did. There's like some sort of settlement where they couldn't sell
something
something.
about
There wasn't-
GLP-1 drugs.
Yeah, that's what it was.
Ooh,
Eli
we got a
Lilly's getting ready to release Retatrutide, which is already available online for like $30, but they're going to sell it for $800, and they're going to tell it they're going to call it the next breakthrough in fat loss.
But what's wrong with the current breakthrough in fat loss?
Not good enough. There's still fat people.
Yeah, but that's because not everybody has it.
Not
'Cause
everybody
it's
can
too
afford
expensive.
it. Yeah, that's the problem. You have to stop being poor to be skinny. But if you're poor and skinny, then you should get rich and fat.
But wait, if they offer the other one for $800, is tirzepatide just going to get cheaper, and then everyone
No.
can use that?
No, Ozempic will get cheaper as they continue to add things to the pill form of it that are really, really bad for you.
Interesting. All right. So Wednesday, Nvidia earnings. How we
Yep.
feeling? I mean,
And
we got to
Salesforce.
talk about it. There's actually a lot on here, but it's hard to even like see them with your mind because Nvidia is just like right there in the middle.
I'm looking
Wednesday
at
afternoon.
it, and I only see Nvidia.
Yeah.
It's like
it's time for you to do the meme.
It's like on
Right.
Reddit when they have those videos, and there's like you can only. Never mind.
It's like blue dress, white dress. Remember this one?
No.
The blue and black dress, and some people saw white and gold, and some people saw blue and black, and some people saw both. I actually could see both, but I saw the blue and the black first, and then
But
when
there
it
aren't
showed up
two
white.
things here. There's just Nvidia earnings, and they're on Wednesday after close.
Right, but if you look just right, you see that there's actually like 100 other earnings as well.
I guess.
Maybe we're
Okay.
looking at different images.
All right, what's going on with Nvidia earnings? What are people predicting?
Up.
Mr. Jensen beat and raise. How's he going to beat and raise forever? It gets a little harder, right?
I think it gets way harder this quarter, doesn't it?
I think the earnings call is going to be the most interesting part yet again. The earnings themselves are probably going to be a beat. It's probably going to be, kind of run of the mill, infinite up, and then we get to hear people ask them questions.
But
And I just want to see if the sycophancy is over yet.
Nvidia is not upstream from Nvidia.
Yes,
How do you know that?
It depends on which part of Nvidia
Well, they've gotten
you're
to
looking
pretend
at.
they were upstream from themselves for some time. But the fact of the matter is,
Because Nvidia accounts receivable is full of orders from Nvidia.
I guess you can piss on your own face.
Yeah.
I spent way too long thinking about the possibility of that. What were we talking about?
I don't know.
We were
Nvidia's going to
talking
make a bunch of
about
money
how is Nvidia going to
from themselves.
what hoops are they going to jump through to get to the growth that they are predicting? So right now they're predicting EPS to grow 70% year over year to $1.53. And then revenue is projected to be around 65.9 billion, which is a rough 67% increase compared to the previous year.
What if
And they're
Jensen
looking.
comes out and says they're not going to make retail versions of their video cards anymore?
Didn't they already kind of say that? I thought they did.
No,
Okay.
all the memory companies came out and said that.
Some of them, yeah. I think.
And that was good
I
for
want to
them.
say SK Hynix still does, and I think Samsung maybe, because it's basically just Samsung, SK Hynix, and Micron. But anyway, so analysts are looking for revenue guidance in the range of 71.7 billion for the next quarter.
I have a theory that I'll propose. What if everyone already bought and paid for or contractually obligated themselves to receive H100s, and all of those earnings have already been shown, even though they're not realized? They've been like, here, we definitely totally made this money. And then what if now all of the money is going towards somewhere to put those cards?
Well, I mean, that's when you look at like the thing I was talking about earlier with the scuffle between OpenAI, Oracle, and SoftBank over the Stargate stuff, right? I mean, there's so much building they have to do to find a place to put all this stuff. And if you look at how desperate all of these hyperscalers and things are, one of the reasons that I look at Bitcoin to get a sense of how things are going in the AI space is because one thing that Bitcoin miners have that hyperscalers want is access to power on the order of, tens to hundreds of megawatts, and in some cases, large fractions of gigawatts. And so all of these hyperscalers are signing deals with all of these AI companies, or sorry, with all of these crypto miners to, pay for future compute. And so all these crypto miners are now building out as well all of this compute, but they're they probably have more experience than the average person, but these data centers, especially with like the Blackwell chips, like you need specialized infrastructure. It's not just a run of the mill air cooled center. There's still a lot of like best practices and expertise that still needs to be developed within the community of builders in that space of just like what works well, what doesn't work well. There's a lot of experimentation I think that's going on there that some of it might not pan out. And so and it's going to cost a lot more than I think everybody expects, and it's going to take longer, but everybody's getting all these loans and they're paying interest trying to get all these chips up and running and producing revenue that also, once they start revenue flowing, they're also still losing money on every watt that they sell.
Yeah,
So
I'm gonna plug myself a little bit here. I wrote like I don't know, did you get a chance to read it? I wrote like an article this week on X, kind of about this, and that like there's all this adoption of these AI tools by corporations all over the place. You know, like something like 80% of corporations have adopted these tools into their ecosystems, but they're not being used. Like, CEOs and executives from, like, 6,000 companies are reporting that, like, nobody's using them. They're not producing any productivity gains. And with that knowledge, like, how many of these corporations are gonna willing to continue to pay for these services that no one's using and that are not providing any realized productivity?
Especially when the costs go up to what they should be.
I mean, there's definitely folks who are starting to grumble in industry, saying, "Hey, this Claude Code, my developers are spending $300 a day each on Claude Code, and we're kind of just creating more slop."
And then just working the same amount of hours getting that code up to par for their
Yeah,
systems.
yeah, yeah,
Yeah.
yeah, yeah.
Well, just working the same amount of hours. Yeah.
So I'm seeing a lot of people focusing a lot on the cost and not focusing so much on the output, right? You go on social media and there's just boosters everywhere talking about how AI is going to replace SaaS because everybody can just vibe code exactly what they need, so you don't need software as a service. And but if you look at all of the people actually building it, all they're really concerned about is how much it costs, not how great it is. Which you'd think if it was super great, the costs should pay for themselves. And by the way, still losing Anthropic money on every watt that they sell to those Claude Code subscribers. So they're spending $300 a day, and Anthropic is still losing money on every query. So super awesome industry. That's definitely going to go places.
Just one more
But
data center, bro.
y'all
One more
got any
internet,
more of
bro.
the money?
Yeah. Hey, man, got another $100 billion loan, man.
Just need some more. I just need one more money, man.
Just need some liquidity.
Yeah. So Nvidia, I think there's no reason to suspect that they're not going to do the beat and raise. I mean, I think they've already suspended it's already been pretty clear that they're willing to book whatever future revenues they need to do this, and that seems to be still possible because everybody's just booking all of their supply. Now, whether anybody's going to make any money off of it is another thing. So I really think this isn't going to end. I don't think it's gonna. I don't think the beginning of the end is going to be a bad Nvidia earnings. Like I think that will be telegraphed long before it happens, because somebody who is handing Nvidia money and getting nothing in return is going to go bust or is going to publicly get out. And that's the sign, right? Then at that point, that is the point at which you start becoming worried about
Wait,
Nvidia
wasn't
earnings.
SoftBank deleveraging their Nvidia position?
Yeah, but that was to spend more on. That was to give more money to Nvidia. So they were selling their stake to become a customer.
I see.
Yeah. So can't be like literally. It has to be somebody who is publicly, knowingly pulling out of the AI trade, whether by force or by choice. But I don't think any of them are going to choose, right? So we're just gonna have to start waiting for people to start failing to pay. But then we're going to play the same game we play with commercial real estate, where you just kind of negotiate the loans and extend the paybacks and delay, right? I mean, they're all going to go to their lenders and say, "Hey, we're 6 months behind schedule. Can we rearrange this? Otherwise, you lose everything." And they'll be like, "Yeah,
You
let's
have to say
rearrange it."
yes. You have no choice. It's an existential threat, and I think
um,
that you'll see it showing up actually in things like credit spreads. You'll start seeing those really pick up, and CDS too.
Also, if I may be so bold as to say, you will see it showing up in Bitcoin.
You'll see it showing up
Because who
everywhere
are
in the
the
credit
most
market.
vulnerable people with the shallowest pockets? Bitcoin miners.
Yeah.
Compared to hyperscalers and your oracles and, your well-funded technology stocks. Yeah, they're definitely the most vulnerable. So, and the thing they're going to sell first to meet their loan payments is the worthless thing that they've convinced a bunch of other people to buy from them. And that makes pricey go downy.
I mean, the
I think
the amount of money, like the scale of these loans, right, really needs to be just kind of like you need to wrap your head around how much money is being used to finance these hyperscalers. It is truly mind-boggling, and it is on the scale of a lot of like, small to even almost mid-sized nations. Like, it's so much money. And if that the risk on those loans goes up, I mean, that is just a massive reflection and on the credit quality or credit worthiness of businesses at large, just purely by how huge those businesses are. They should be the litmus test of credit quality for companies.
Well,
But
Kirk, didn't you post something earlier today that credit default swaps in that space?
yeah, they keep just skyrocketing. The demand for hedging is quite high. And this is coming at a time when near-term cash is expensive, and there's probably already a lot of like corporate infrastructure hiccups due to just the financing costs against like for SOFR versus IORB, and they've got those costs to combat, and then now they've got costs from significant issuance in their own debt, and this is ultimately at the end of this, it either pays off or it doesn't. And I think people that are willing to buy those bonds are also going to demand, are going to bid up the demand for the risk on those bonds. And yeah,
oh
yeah,
yeah,
we're seeing those CDS markets move up because they're issuing so much debt.
yeah,
Um,
it's such
but
a
I,
it's a liquidity thing almost in a way.
yeah, yeah, it is. I mean, there's just no way you can extract that much money from the system and not have the risk of failure baked in. And the risk of failure is getting higher and higher every month for the last like 5-6 months. So
Well, it's all
um,
also incredibly highly correlated too. So
yes.
Yeah, and so speaking of like crypto folks, Hut 8 is a big one, right?
Well,
Is
actually,
that
actually,
crypto?
before we move on to bullshit earnings that nobody cares about and don't exist because it's Nvidia week, why don't we like actually talk about what risks there are to Nvidia's earnings? At least because I mean these are highly anticipated. Like the by far, like you said, this is the S&P's earning call. It is its only earnings call. This is the driver of the whole bubble. It is everything. And
Jensen Huang
so
is the CEO of Spy.
yeah, I don't think
I
we
mean,
can
the
ever
risk.
spend enough time talking about this, but I want to I do want to drill down and focus on like what are the primary risks to Nvidia earnings. And I think we actually like I think we're at a point where there are some, right? We're past all the speculative guidance. The H100s if have been shipped. Blackwell's the new thing, right? And that's the transition that I think is not going to go so well.
Well, that's the thing though, is that it's too soon to really tell because Blackwell is really the first group of chips where if you want to get the full impact of, their performance boost over, the H100 series, you've got to water cool them. Otherwise, they're going to get throttled to like 60%, and then you've paid a premium to get basically no benefit over your H100 system, right? We're getting to the point where as a thermal guy, I love it. We're getting to the point where thermal's the whole name of the game. And these days it is not trivial, right? You've got to get you've already got chilled water flowing around the building, right? We assume that that's all kind of worked out, although it's super dirty. So maybe you still have to do additional closed loops of clean water that go to every single rack and go to every single unit in the rack. And every single one of those hoses that goes to every single unit in the rack has to distribute water evenly, right? So you have a 1 in to 1,000 out problem, right? And make sure that every single hose is flowing well, and you don't have one low pressure one. Like everybody has that one faucet in their house that's a little lower pressure than everything else, right? And the pressure changes when you turn them all on. That distribution issue is not trivial to do, and something that requires 100% uptime, and any sort of deviation from optimal could result in catastrophic failure. And so none of these things have been fully vetted, right? I mean, it's the problems are all solvable. I mean, they're very manageable engineering problems, assuming you have the money and the will to do it. But it just needs to be done. And there's always that aspect of you don't know what you don't know until you go out and try it, and it takes a few iterations. And so you've got all of these people building data centers, some with very little experience, that now are having to build these spaces with no like best practices that exist in the industry, right? The industry hasn't really gotten their feet grounded on this paradigm. They thought they had another like 3 to 5 years before they'd ever have to even think about putting water in a data center. And then Jensen Huang comes around and says, "Surprise, it's now." And so that is a huge risk that I think nobody's taking into account. And it's not simply a risk of, how much money are you going to make off your chips, but it's a risk as well into the lifetime of these chips. And that's not going to get borne out in the short term. But if the failure rate, the 1 year failure rate on these chips starts to become significant, and it's higher than what people are expecting after they're depreciating it over 6 years, they're fucked. And I think that this is a huge issue that nobody's talking about at all. Thermal thermal failure rates are catastrophic. They are progressive, right? Once they start, they just keep getting worse and worse until you get catastrophic failure, and then the chip is dead. There's no recovery.
I think
And so we're going into this extremely high risk zone with these chips, but you also have the Jensen beat and raise requirement where he's got to sell all these Blackwells, and there's nowhere to plug them in.
yeah,
So
that's kind of what I was wanted to focus on, was that like, you know,
yeah,
that is the expectation at a minimum, is beat and raise. And Nvidia guided out what, like 70, mid 70s for gross margin for this quarter. But at the same
does that include
time,
all their investments into their buyers?
yeah, of course. Um, but
Sorry.
at the same time, like, you know, you've got a lot of that gross margin is like that continued growth and gross margin is going to be reliant on like the Blackwell ramp up, right? And the H100 ramp was so successful that everyone assumes that the Blackwell ramp is going to be equally successful. However, like you're saying, they have a lot of these chips, they have nowhere to plug them in. Um, and it doesn't take a lot of pullback from people who are like, well, I bought H100s, I'm good.
Well, what's the
Like, I
return
don't,
policy on them? They may just return them, right? You can do that.
oh
Just
god.
return them.
But I mean, I feel like even just the smallest slip in gross margins over prior guidance is going to be a significant blow with their valuations where they're currently at. And yeah, like there's the bull case there too, which is, everybody and their mother's spending money on this right now. And, the four hyperscalers alone are expected to spend like 650 billion. But what if that spend's not allocating where people think it is? What if that spend is allocating towards building out custom ASICs and building out networking and power and buying real estate versus buying more GPUs, who Microsoft is already told everybody, we have too many, right? We have so many fucking GPUs. There's not enough power supply in the grid in the regions where we're present to fucking power them.
Yeah, I
So
think on the
I think
flip
we have
side,
like
though,
big infrastructure hurdles to cross, and that's a lot of where this capex is going.
but the question is that are they going to show that hand in this earnings? Because the other way to look at that with the hyperscalers and Nvidia is they're all kind of in the same boat that's sinking, and they know that if Nvidia doesn't do their beat and raise and look great, everyone's going to turn on them, and they're all gonna get under increased scrutiny at a time when they want to just take a bunch of risk and they don't want anybody to question it.
Well, this is why the earnings call is going to be so
Well,
interesting, is
well, like
So I
because
could
Nvidia's
easily see the four big ones saying like, "Oh yeah, well just put these orders are good to go. Let's get a contract in place. Put them in your earnings. We'll buy them when they're ready." And you just hold on to them. Just keep the money. It's an IOU. It's as good as cash. Like just book it.
I think
Um,
I think some of the problem there is though that like so much of Nvidia's earnings is like I mean just like the S&P, it's highly concentrated in like 5-6 companies that are spending unbelievable amounts of money, and almost any shift in the budgeting there, which shareholders are demanding because capex is so high relative to cash flows. Shareholders are already pissed. Microsoft's down like 20% this year. This is not like people are not happy with the amount of money these companies are willing to spend, and any shift in that budgeting away from Nvidia, from any of those 5 companies, represents a significant blow to their margins.
True.
that's why I think the
Right,
earnings call is
but
going to be interesting, because
Yeah,
I want to hear if the investors are going to start really sounding the alarm bells about a lack of appetite for even more, build out stuff from
the
Nvidia.
l the last thing is I looked on GammaStrike, and
oh
skew
shit.
skew on Nvidia just keeps dropping on, like, the 10 and 30 day. Those puts are getting real expensive into earnings, and then also, there's no fucking support on that stock to the downside, so you get to, like, 160.
Oof, that would be
None.
rough.
But there's resistance to the upside at 200. People are selling those
Well,
calls,
sure.
but,
So they're all gonna get blown out when he does the beat and raise and everyone closes those puts?
yep. Nvidia
Sounds
at
like we're going
220.
to 210, yeah.
Fuck me.
Oh god, I hate the market. Alright. Yeah, so I am actually maybe even marginally more interested in, like, Hut 8, CoreWeave, Marathon. The people who are kinda building out and somewhat dependent on the big boys to prop them up. Because I feel like those contracts and those promises are the weakest. They're the weak link.
Yeah.
In the crypto space?
The AI crypto space, right? I mean,
Okay.
It's
I
like,
just don't
there's
care about crypto at
there's
all.
what because you don't understand how intertwined it is with the AI data center build out.
It's just leveraged dollars.
Right, but I don't care about the Bitcoin either. I care about the fact that they're all leveraging tens of billions of dollars to build data center compute for AI hyperscalers and others.
So,
They're buying lots of Blackwells,
are they?
or so they say. Yeah,
Is
go
anyone
look at their
actually
earnings.
buying Blackwells?
That's what they claim in their earnings. Some of them are substantial, and they're planning on buying a lot more.
What about rack space technology?
I don't know what that is. Is that a bra company?
It's either a bra company or they make server racks.
There's no way to know.
I mean, well, I'm more interested in the
Yeah, you can't
insurance
look
for
it
these
up.
things. You know who insures data centers? Marsh. You ever hear them?
No.
They're not having earnings this week, so we don't have to get into it, but I'm interested in Marsh.
All right.
Damn, rack space technologies is up like 200% in the last 3 days.
Somebody expects really
300
good earnings on Thursday, I guess.
300% with a peak at 400.
Okay,
Nice.
so just to put things into perspective, everybody, it went from 39 cents to $1.60, and its all-time high is $26. So there you go.
All right. Well, I mean, there's
Hold
some
on,
other. So, like,
but they
I'm also
provide
interested in.
multi-cloud services.
Okay. What does that mean?
I have no idea.
Kubernetes.
Maybe they allow you to use
Kubernetes.
more than one cloud platform at a time.
We have Kubernetes. Awesome. Multi-cloud. Cool.
Yeah.
Yeah, I'm also kind of interested in like places like Freshpet, Domino's,
I mean, Salesforce
Home
is going to be
Depot.
interesting. Aren't they still
Home
one of the biggest
Depot,
customers of AI?
probably.
Because they
all
had
these
some
like
AI bullshit that
consumer-facing
sucked.
businesses. What?
I mean,
Salesforce?
Salesforce
Yeah.
already sucked, so it wasn't like
Yeah, and
What
they
was
made
it?
it
What was
even
it called?
worse.
It
AI
was
was gonna
called
make it better.
Agent Force, which is just a ChatGPT wrapper that they called doing agents correctly.
Yeah, it fucking sucked. Yeah.
Well, I mean, the people use those about as much as they use anybody else's agents because it's all
Yeah.
the same. It's all the same chatbots, just rewrapped into
What if
different branding.
the global sales of Celsius energy drink are the best representation of actual productivity?
You might be onto something there, actually.
Yeah, but isn't that just you? It wouldn't it be easier to just ask our backend developers how they're feeling?
Who makes Ghost? Have they been bought out yet? Are they like independent?
Iran.
I don't know. Bottled
I mean,
directly from the Strait of
actually
Hormuz.
now that we're done with Nvidia, and I can look at the other
You see him now. See, you went from
the other
blue
earnings.
and black dress to white and gold dress.
Yeah, well, because I just had to say everything there was to say about Nvidia, or at least what I was looking for. But yeah, Domino's, Home Depot, TJX. I mean, those are important. Like Dell's going to be very important. Also, probably going to beat like fucking crazy. How much did they want to charge you for RAM the other week?
Oh, I was pricing workstation, but they wanted to charge me like $4,000 for 128 gigabytes of
Yeah,
RAM.
that sounds
One arm and
perfect.
one
Yeah, so
leg.
I'm gonna buy 3 calls on Dell before earnings and just lose money.
Perfect.
But
Hold on. This is a chance for us to relive the blue, black, white, gold dress. Which one do you see? Blue, black, or white, gold?
where is it? I don't know where to
It's
find
so
this.
clearly white gold that I'm shocked that anybody sees anything other than white and gold.
That is a blue and black dress, Dork.
I can
Yeah,
put this thing into an RGB color picker and put out the actual hex values for you guys if you would like.
But that's not the task. The task is to how do you perceive the colors, right? Because right now I see blue and black. I have to look at it for a long time before my brain switches it. And then once it switches, I can't switch it back. It's really weird. But
So
yeah,
I
right
just
now
went
I
ahead
see
and used
blue
the
and
color
black.
dropper on it. And then I'm going to put those colors, the color dropper showed me they are.
That's blue. One of the colors you posted is blue.
Yeah, but it's actually a shade of white, and it's because the thing's in the fucking shade. It's just a dress in the shade.
Looks blue and black to me.
All I'm saying is this is nothing like the spinning ballerina, silhouette, which is an actual mindfuck.
Yeah.
This is just purely a white and gold dress. And if you think about it too, those colors from color theory make way more sense to put on a dress than blue and black. That's all I'm saying. I don't get, and I it's just so painfully obvious to me. I don't understand how anyone even could see
All
blue
right.
and black.
Well,
you should probably talk to your psychologist.
We revisited the internet circa 2017. I don't remember when it came out. It was a long time ago. Let's move on. Anything else on earnings, or do we want to?
Planet Fitness. They're gonna go down.
I mean, yeah, another consumer. Do we want to take a break here, Ron, or do we want to go through?
No,
let's We're going to take a commercial break. We'll be right back.
Yeah.
We're at over an hour in, so it's clear you like Volstars, and for that, we're thankful. Could you do us a huge favor, though, and be sure to give this a like and subscribe if you haven't already? It really helps us to get the podcast out to others, so we appreciate it. Thank you. Well, hey there, stranger. If you're enjoying this podcast, be sure to check us out on our socials, where you can hear the latest about Volstars and GammaStrike. Check us out on X, Blue Sky, and Reddit.
All right. Let's get back into it. We got the calendar this week. What's on deck? We got Goolsby, got Waller. They're
Everybody
all
from
giving
the Fed
speeches.
is running their mouths, and
Holy
they can't.
shit, they are.
Yeah, they're getting paid a lot of fees this week, but they can't really say anything because despite inflation being down, PCE was substantially higher than expected, as was the last PPI report. So they're going to have a hard time selling any cuts. I'm not sure any of them besides Moran, want to. And so probably a lot of nothing out of them, just circular logic about how everything's fine. And then the only other thing I see that matters is PPI end of week. Maybe Chicago national activity or factory orders being down could weigh on manufacturing.
Yeah. I mean, I hope by now we've kind of biased our listeners to not care too much about initial jobless claims. I don't think they're going to show anything. If they do, that's super bad.
Yeah.
Because that means
They
whatever's
almost,
happening is accelerating rapidly. But yeah,
yeah,
I think you
almost
don't need
never
to.
the initial claims have an impact. I think the last time they had a big impact was like 2022 when they just
When
started.
everybody was afraid that there was a recession coming because that was
Yeah.
the overwhelming narrative, and then we just juice the economy through deficit spending.
They definitely become more important relative to volatility in the market. So fear up increases the impact of like mm, h- well, not all of them, but most of the like weekly data points.
Yeah, well, I mean, so speaking of fear,
Everyone,
you
everyone
think
will start watching like
maybe,
jobless claims and mortgage rates and stuff a lot more
well, do you
closely.
think maybe that consumer confidence on Tuesday might surprise or might be meaningful?
I don't know. Prices have been stagnant for a while. Usually the consumer becomes pretty complacent, and a complacent consumer is a happy one. So I think until we get some price shocks, which we should start seeing come in because oil's been substantially higher for the last month. But
Yeah,
I
I
think
saw
for
that Brent's
now,
over 70. Yeah.
yeah, I would say, but for now, probably not. But as oil
Yeah.
prices rise, consumer confidence will falter.
So this week, all eyes on Nvidia and
PPI end of week could be
then PPI.
significant.
Yeah. So
Obviously, with
wins.
all the
So
capex spend, if they're getting hit hard with inflation, that's a big deal.
Okay.
yeah, agreed. I mean, PPI, if it comes in hot again, that's rough. All right, Dork, take over, sir.
Well, first off, holy shit, ton of questions, you guys. Thanks for asking all those questions. We're pretty far along in this podcast, so I don't think we'll be able to get to all of them, but we've got some good ones in here. So, pending them staying relevant, like all the, geopolitical questions we got on here, things like that, we will hit them up next time. But don't be afraid to ask more questions. We do post links on all of the streaming platforms. We also do posts on all of the various social medias out there, and you can just comment on those and ask your questions. They'll get on the list, and we'll see what we can do. So, first question, I don't know where this one came from, but we had someone asking, about they bring up a trading strategy where they're doing some short dated short strangles and hedging them with Vega about 180 DTE out. And so this person says they don't think the market can hang on in this range for another 6 to 12 months. So they basically sell those contracts up to 3 times and then reposition them if necessary, and then use the long Vega position to as like a hedge. So their question is, how can they see these longer term IV changes for their long leg of the strategy Or do they have to extrapolate from the 90-day IV HV skew?
I feel like Girk should probably take the deepest stab at this, but I mean, basically, you're betting that sometime in the future, volatility is going to blow out, and you want to try to manage the cost of that bet, right? You're buying insurance on vol, and you want to try not to just pay the full price on insurance. And every time that you try to, salvage some of the cost of that insurance, you're taking a bet that it's not going to happen quite yet. So, I mean, that's at that point you're getting pretty far into like an actively managed position. I don't think it's something that you can just like open a few of these and just wait. You're gonna have to come up with strategies depending on what actually happens in the market so you can be prepared to not lose more than you expected.
Yeah, I mean, I think like you're short the front month gamma and short the front vega. So you're trying to harvest all of that, like that near term risk premia, but then you're like long the back vega and long the convexity, like the long tail convexity. So that's, I mean, it's mismatched. So I mean, basically, like your wings aren't hedging the thing that hurts your position first. Because if spot moves and RV spikes, you're like 30, 45 at the money shit is gonna get fucking hammered. And usually the front IV moves up faster than the back IV. So you're not getting the benefit from that longer dated Vega you think you are. Um and so you're covered, you're really only covered in like actual like black swan tail
Mhm.
risk events. And your upside wing is like structurally way less reliable than the downside one. And so if you're trying to do this repeatedly, I mean, you're kind of still trying to do that same thing where people make mistakes, or they try to bet on the downside. Like they're like, oh, I'm going to bet that we're going to have a volatility event within this time period, but you're betting that it's not going to happen right now. And I don't hate that, but I really don't like the structure of the positioning. I mean, I think tightening up that front Vega exposure, and turning it, more into a typical calendar spread where you're not too far out of the money, is probably significantly better. And it'll give you like more delta exposure if you want to continue buying that far out. At least that way, if everything shits the bed and you do have a big move down, you will still make more money on your 180 DTE position, but you'll be better hedged, in the event that like things don't just get blown out a little, because that's where you really get hurt. Is you get a little bump in front vol and the market drops a little, but it doesn't drop enough, and then it stays down. You just get destroyed.
Yeah,
Yeah,
and
keep in mind too that longer term IV is already fairly elevated. So, you're already paying a lot for that, at least historically over the last few years. We're kind of getting into closer to like a 2022 environment. So you need that vol to come to be, and then to actually change people's reactions, because they've been Pavloved over the last few years to buy the dip aggressively in the short term. And so that's why like we never really see any downside gets immediately snapped back, right? And so Yeah, this is a pro gamer move here.
This is a
This is not
persistent.
an easy position to profit greatly from.
This is like a persistent problem with my community. Is like we talk about buying like Vega puts, and people think it's like a sure thing because when I buy long dated puts with lots of Vega exposure, I buy them when they're really cheap. Like they have to like I look for like VIX 3 month to fall like under 16 sustainably before I'll even consider picking some up. And you know, right now we are not in that environment. We're in an environment where, you know, VIX 3 month is higher. It's a 21 relative to VIX at 19. Those fucking options are expensive as shit right now. I mean, this is definitely a time when like being long the gamma is much better than being long the Vega. The Vega's expensive. I mean, if you have the money to buy it, sure, and you need the exposure, okay, but it's not cheap. It's not like a good arbitrage trade. And I think too many people try to figure out a way like, oh, you know, maybe I can like that Vega's expensive for a reason because people are afraid of the downside. So you're selling the short term saying, I'm gonna bet everyone's wrong right now, but then they'll be right later. And so you're gonna pay up for that Vega, and you're gonna try to offset the increase in cost by financing it with the shorter dated option. But the premiums on those aren't isn't it's not like that good. So you're like those 30, 45 DT options. I think VRP on that was like +5 at the end of last week, which is it's not bad. It's like okay, but it's middling. You know, it's not like +13 or 14. It's not like we just had a vol event and you're selling 30-day puts with a ton of potential premium on them. It's just like they're kind of okay, and you can definitely get blown up. And the
Yeah,
fact that
you're
like and the fact that that premia is staying elevated and skews continuing to steepen should tell you that nobody else wants to take the trade that you want to take.
that's the
Like
concern.
Yeah, he's
everybody
gonna
in
be
the market
spending
is
a
saying
month
that's not a
basically
shitting
good
his
trade.
pants,
sort of
basically.
late to the vol trade. Not like it's not like there's no potential money left, but you're basically playing chicken with a train with wearing cement shoes. And everybody else is much more prepared to jump out of the way before you.
Don't film trains in India. They don't like it.
Mm.
All
Yeah,
right,
this
next
strikes me as a very
question.
stressful position to have, honestly.
Yeah. I wouldn't want this. It needs to be actively managed. You have to delta
Yeah.
hedge your short risk. It's dangerous and messy.
But to answer your
I
question,
would
I
I
mean,
would
Yeah, no,
like
it's
a
great that you're thinking through these things, but be prepared to 90% of your ideas that you come up with are probably going to be bad, and that's okay, right? The key is finding the ideas that are good.
that's a
I
pretty
would
low
say that
estimate
if
on
you
my
if
part.
you want to continue to buy that long dated exposure, I would move those closer to spot, like 15 delta, 20 delta, maybe even like 25 delta, or use like a straddle on the back month or something. You know, sell a condor and then like use the condor to finance downside if you want to. But at least then you're like you're capping your max risk directionally.
Yeah. I mean, and to answer his question too about the longer term IV, so he's basically asking like, how can I try to suss out what's happening at IV way further out because our IV and HV and stuff go 90 days. He's getting these 180-day contracts. The best way to sort of suss that stuff out is to use the actual term structure because
Dork, yeah,
that'll you can look at that.
don't undersell our tools. We have the
Yeah,
whole
we
term
have term
structure.
structure.
Yeah, that's what I'm saying. Use the term structure. That's what it's for.
Yeah. Okay.
So you just use the term structure, and you can also plop it right on your strikes, and it'll give you a good idea of what
It's
happened to
all
them. But you
there.
also are owning those contracts, so you should have pretty much direct visibility into what they're doing.
And I can't wait for the things we're cooking on that IV page. Spend some more time on there. And once you think it's great, it's gonna get so much better. And I can't wait to talk
J
about
Fresh
it.
cooked hard. He's braised the IV page in white wine and beautiful stock.
Shallots.
A
It's gonna
mirepoix.
be
Shallots and roasted garlic.
Yes. So excited.
The leaves of vegetables peasants eat.
Yes.
Like a squash blossom.
All right. I don't know what question you're going to do next, but I would like to heavily influence you to just start at the top because I have a few things to say.
You
about
confused
that
the shit out of me with that one, by the way. I did not know you were gonna jump. I'm like looking at the list.
I just wanted to get it out of the way because it was big and involved, and I was like, it's hard for me to paraphrase it properly. So I was like, I'm thinking about it. I just got to get it out. But now we can switch over.
I wanted to answer that one.
Yeah, I know you did. So I was like, let's just get it out of the way. So first question from Reddit. We have a lot of Fed speakers this week. Do you think with the restructuring of tariffs, we see a shift in tone from the Fed? As an extension of the first question.
Even more cautious in doing nothing.
Yeah. Okay. Like this whole like Fed tone, it needs to die. Like it doesn't matter.
The Fed doesn't do anything because they don't influence rates at the long end. All the Fed does is ensure liquidity at the short end, and they try to keep financing smooth, which they suck at right now.
They're the boy that cried wolf.
I think they're kind of getting to a point where I think what they're trying to do with like the reverse repurchase agreements and stuff is try to figure out like, okay, they're at the point now where they're like, okay, people are using this shit, which means that we are sufficiently tight.
Are you trying to explain repo markets to me right now, Dork? Are you mansplaining repo markets?
All they're doing is making sure that quote unquote reserves can stay ample while banks continue to buy back
reserves
their
are
stock.
currently not ample. They're trying to get reserves
but they want to make sure
ample.
that the reserves are ample while also maintaining banks' ability to buy back stock.
Yes.
Okay.
The banks don't make enough money, and the only way to fix that is to give them more, not to have them charge more money for the loans that they give out.
You have to make print them more money that they can transfer to another country.
Because banks are insolvent. If the Fed has to continuously print money for banks, the banks are insolvent. That's just simply what it is.
Wait, hold on. We can all dress it up. Banks have been insolvent since 2008?
Yes, we can try to dress it up and all this fancy shit, but at the end of the day, the banks aren't making enough money on their own through their own business practices to remain a going concern without...
I didn't realize you were the leader of the terrorist organization Antifa.
What is your problem, Jay Fresh? Seriously, man.
This is why I can't show my face. Because I don't want somebody to kill me who doesn't understand sarcasm and satire.
That's stupid.
This was all satire.
Wait, hold on. You're afraid of death by stupid person?
Yes. I am.
You know, stupid people can't even fix being stupid because you
I'm
have to
an
be
engineering
aware that
professor at a flagship research university. I am surrounded by stupid people.
Both in your professional and personal life?
I'm not going any further into it.
Okay.
No comment. So then I guess in terms of the extension...
imagine if Moderna came out with a cure for stupid.
There already is one of those. It's called books.
Those don't work. You have to be able to read first. And 40% of our country is illiterate.
I mean, I figured out how to read from books.
I learned how to read, and I learned arithmetic on the record player. Fun fact.
I learned to read from Final Fantasy, the first one.
You know, I think one of the reasons my 10-year-old son is such a good reader is because video games have words in them, and he wants to know what they are.
Yeah.
Yeah.
Well, I think we also answered the extension to the question where he's talking about, you know, they're more narrative stuff, wait and see, transitory inflation, that kind of stuff.
Yeah, they're just going to say wait and see because they have nothing. Yeah. The only thing they can do at this point is hike rates to try to improve liquidity and get money back in on RRP. And can they do that? I mean, the political pressure is very strong the other way. So they're just in
Right.
limbo, which they've been in the whole time. And no matter how many times they cut rates, nothing's changed.
Yeah.
Rates on the
Well,
rates on the 10-year are like exactly
they
where
did
they
help
fucking
slow
were.
down the economy. Which
Well,
is,
yeah,
they cut rates to prevent that, but
but cutting rates didn't speed up the economy.
No, it slowed it down.
1.4% annualized in
But no, wait, you have to.
2025.
So the thing is that cutting rates should make the economy go faster. So the counterfactual was that it should have been going. It would have gone even slower if they didn't cut rates. Or the other strategy is we'll just offset the timing between the two graphs until you get the trend that you want.
Until the benefits of the rate cut become transitory.
You can't use that word. That's a bad word.
I know.
All right, Dork.
Yeah, let's move on. So, question from Reddit. This guy said he'd love to hear more detail about how, if at all, the changes. I'm assuming they're talking about tariffs have impacted the U.S.'s positioning at the bargaining table. And I think we kind of covered this earlier in the stream.
Yeah,
but
there's there's no more bargaining.
Yeah, there's no more bargaining. These tariffs are applied broadly. It's just a big brush. Everything is tariffed at the same rate. That's how 122 works. There could be negotiations later on if there's approval of what is it, Section 301 tariffs or what whatever. I can't fucking remember all the sections. But I think it's 301. If those are investigated and put to public opinion and found to be viable, then yes, those could be used to pressure other nations back into a negotiating position. But I think right now everyone's just going to be of the opinion, why the fuck are we dealing with these people? This is a mess. It is an uncontrolled, chaotic mess, and there is no reason to transact or do business with a country that is like this. It's like we're like Swaziland. Like, I mean, it's just there's one ruler, and all of our economic decisions are made at his whim, regardless of how uninformed that whim may be.
I see.
Which is why undeveloped countries have to pay a huge amount of interest on their debt. And as we slip further into becoming a more and more undeveloped and less globally recognized country, guess what's going to happen to our rates?
Down. Straight down.
Down. Yeah.
No, straight up.
No, the Fed will print. Inflation
doesn't
goes
matter.
straight up.
Down.
Okay. Well, then inflation goes up at a rate relative to the yields. I mean, it doesn't matter. The rates go up.
Everything's going to go down. I mean, the dollar's going to go down and rates are going to go down. It's not going to matter. It's all fake.
All right.
Okay.
Do we even want to do the next question? I don't even know how to answer it.
No, I think we move on. Maybe we can involve it
We
later.
talked about Iran, so go rewind and listen to that.
Yeah, so this is a question from the Discord. What structural changes in the gamma landscape typically precede macro regime shifts? Like when markets transition from short vol grind to long vol, do we get to see this reflected first in GEX compression, skew steepening, or persistent negative gamma zones? I mean, we're kind of seeing it in the macro page.
We're seeing it now.
And J-Fresh did touch on this earlier. You could see on the chart that we probably showed that we're seeing put premiums increase, slowly but steadily.
Yeah, and like GEX tends to tell you like the extent to which you are in the process of that.
Yeah, GEX is very near term weighted.
Yeah. So it's not really gonna
I will say that if you
really
get
gonna signal ahead of time, right? It can kind of show you like when you're more vulnerable for something to happen, but it's much more useful as like how far is this gonna go before it might bottom out or before it stops moving.
Mm-hmm.
I will say something though. If you stay in a persistently long period of negative gamma, things typically get much worse, much faster.
Yeah, because everybody's betting on the reversal, and every day it doesn't happen.
Downside is quick. The incentives to reverse the market become very, very tangible, very fast. Upside is slow, it's grindy, it's persistent, but downside is rapid, realized and reversed, generally speaking. But I will say that if you get a big sell off in the market and you get like a bear rally, and that bear rally fails to mean revert fully, like you stay in a negative gamma environment during the entirety of that bear rally, the next leg down of that shit is going to be nasty as fuck.
2022 is a great example of that. Go
Yeah.
scroll back to
2024
2022.
also, actually.
Yeah.
Like we
Yeah.
dropped into a negative gamma environment in March, and then we hit April and we fucking just tanked like 20%. So yeah, I mean, be very aware of that.
Yeah. I think that's a good
But
way to
yeah,
put
we've
it.
got
Absolutely. But
data
you,
back to 2016 where most of the data really starts in options. So go nuts. Go look back and see.
yeah,
And then
I
for
mean, and
skew steepening, I mean, skew steepens naturally as people become more bearish anyway, because there's just less interest in calls. And
Yeah, but yeah,
people are always buying put protection, but they're not always buying calls. And I think a lot of the skew steepening we've seen recently has just been the fact that people don't want calls. People aren't going to buy like a bunch of longer dated calls and drive skew back the other way.
yeah.
And
Well,
so
I
just the
mean,
natural steepening is taking hold.
put contract
I will
values
say if
are
skew 10 goes below 30, watch the fuck out because it's going to get ugly.
yeah,
But
but put values. I mean, they have been trending up for the last 6 months, which has been. I mean, it looks awful. Like if you need a signal that something could happen, you've got it. It's there.
yeah, it's definitely there.
I honestly, I look at it every day and it just keeps not getting better. And I'm just like, what do I do with this? Because this looks really bad.
buy Nvidia calls for earnings.
But then you look at like the market and yes, it's extremely choppy and much more volatile in the intraday, but it's still kind of just not doing anything. It's just like, something could happen, right?
Yeah,
Anyway.
no, the macro page kind of, if you're talking about like full on regime shifts, it's SPX and it's the macro page. It's seeing, yeah, what's the gamma environment in SPX? Is it sustained negative gamma? And then on the macro page, it's definitely put premiums and the put leverage as well.
And when
Things
you
to look
are in a
out for.
negative gamma environment like that, because of the way that downside reflexively begets more downside, you kind of end up in a situation where it can just take one small thing and everything snaps, you know.
Yeah, the market's kind of on pins and needles at that point. You know,
Yeah.
everyone's kind of waiting for either the other shoe to drop or for things to get better and the savior to swoop in, whatever that may be. So, but yeah, and at that point too, if you're in that sort of environment, there will be, something pretty obvious that's making that happen. It doesn't just kind of randomly happen. So,
Yeah.
um, yeah, you'll see it everywhere in the news and the shit, and you'll see it in the data too. Okay, another good question here. In a world of 24/7 financial news and social media hype, how do you decide what information is signal and what is just noise?
No, it's easy.
You ask ChatGPT, what trade do I make today? And that's what most people in the market are now doing. So that's the one probably to try to front run.
I just try to attack it. So I'll look at like all of the news broadly at any given time. And I mean, I will say the more time you spend monitoring this kind of stuff, the easier it is for you to dismiss a lot of headline news because it's mostly bullshit and biased. But if they do make valid points, whatever thesis is driving the market, whether it's, AI speculation or data center speculation or, capex bubble and all this other stuff, like, you can just isolate the key points of each of those, right? Determine what thesis you think is driving the majority of investing in the market, which is usually pretty easy because the hedge funds own all the news agencies. So whatever they're telling you is exactly what they want you to hear, which means that is in line with their positioning. And then I just like to take those key points and see what's true, what's false. Is it a valid point? Is it not? And that's very easy to do. It takes a few minutes of googling to figure out if if that statement is true or false, and then I just move on from there. And if the falses outweigh the trues, then I don't buy into the narrative. If they don't, then I do. It's not that hard. What is difficult is knowing what to look for, and familiarizing yourself with that like critical thinking thought process. But once you get familiar with it and you get experience with it, it comes easier and easier. I think like my community. We've been doing this for like 5 years, and a lot of people in it now are pretty versed in what's going on in the market and how it's going to affect things. And when news breaks, that's kind of they're not looking at the headlines anymore. They're looking more at the structural shifts that are happening. They're looking at like Bank of Japan decisions. They're looking at yen intervention. They're looking at the things that are going to drive the things that people are talking about. They're not they're not looking at the output anymore. They're looking at the inputs. And I think once you can do that, you get in a good place.
Yeah, and I'll
Yeah.
just add on to this. Talked about like the critical thinking and the reasoning. You have to build a very strong worldview, and you have to constantly be attacking that as well and adding on to it, right? So you don't add anything to the way that you view the market or the way that you view the world unless it is internally consistent with everything else that's already in that view. And if you keep doing that, always checking, not just ingesting all the information and assuming it's all important, taking it all at face value, but evaluating it. Does this jive with everything else that I already take to be true about the world? And if the answer is no, then you have to figure out why, what's wrong with it, and then that'll usually lead you down enough rabbit trails to figure out where should I go look for more information to help myself understand, why this does or doesn't jive with the rest of the things that are in my worldview. And every once in a while, you find something wrong in your worldview, and then you modify that and add in that new piece of information. But yeah, it's always building what, like every decision that you make should come from one consistent framework about how the world works.
Yeah, but oh yeah, I agree. And that's part of the critical part of that thinking is that you need to be yeah, you definitely need to be critical of yourself as well and what your assessment of the truth is. And because it will drift. You might not be wrong, you might have a solid stable worldview, but there's always drift, and you need to be able to adapt to that drift. So you need to modify it, you need to think about it, you need to change the way you perceive things, or at least change the information that you're willing to look at in order to modify your interpretations. Like a really good example of this is um, I don't I don't I don't pick long-term stocks very often, but when I do, I'm very successful at it. And one of the reasons I think I am is the first thing I do when I look at a stock is I go that I want to buy or I'm thinking about buying is I go, what are all of the good reasons, the valid reasons that I would open a short on this? And I build an entire short thesis. Then I build my long thesis and I see which one's better. And if my short thesis is better than my long thesis, I do not buy that stock, no matter how great I thought it was to begin with.
Yeah, and I'll just say too, I mean, in terms of signal versus noise, like there's you once news breaks of something that's, unless it's a developing thing where not anybody knows anything, I mean, what you have is what you have. Anything that's kind of tacked onto that is, it's a 95% chance it's noise. So, and you really like, especially when it comes to like, Jay Fresh and Girk were talking about with the worldviews and those things, you have to kind of leave your ego at the door when you're doing this stuff too. You can't really let your own, sort of ideas about what should be or, anything like that get in the way of what is. So That's my thing on that. So I think we got so many questions, guys. Thanks for all the questions. Like, I seriously appreciate having this much material to yap about. So let's.
Yeah, I feel bad. This is like the first week we couldn't hit every single question, but yeah, we're
I
already
kind of
long
want
on
to
them.
take that next one and
I
then
kind
cut
of
it
did
off
too.
there.
Are we all going to
I
say the
mean, well,
same thing?
Because I want to get
Well-
sentimental.
Okay. Okay, fine. We can do one more question real quick.
I have
Let's hit it,
two.
and then
One is one I think we're all thinking of, but say the question first. Sorry.
you just the very next one. In 20 years,
Yeah.
when you're all retired
Yeah,
and the stream
yeah.
is a distant memory, what is the one catchphrase or inside joke that you know will still make you laugh or cringe when you think about it?
I know what the one that'll make us laugh, baby farms.
Yeah.
The one that'll make us cringe, and I'm never going to explain this to anybody else, golden biscuits.
I think you just answered it.
They were so great.
That's the answer.
Shit. I want to say I will always look at myself in the mirror for the rest of my life and think about what I would look like as a centaur. And then also, I mean, it has to be said, do puts cost same like shares.
Oh God, yes.
No,
You
it
will be
is
the
good.
only centaur in Persian history with the entire body of a horse, but the penis of a human.
That was the. I hope so.
Oh, why did I have to visualize that? Fuck you, Jay Fresh. Oh man. Yeah, I like baby farms. That one's probably still
You gotta
be
have
saying that in
one. You gotta
20
have one that's
years.
different. What's one that's different?
Oh, you guys caught all of them though.
Making him go last is the hardest. Yeah.
I know.
It is.
Ooh, I have one for you, Dork. You can either agree or disagree. Show me your
Okay.
butt.
Oh yeah, that's a good one. Show me your butt. Yeah. Show me your
I
butt
just
and
wonder.
grandma's
I
hole.
just wonder if Dork sits at home and face swaps himself onto women,
I don't do that. Was
like
that was
Buffalo Bill, like just dancing in front of his mirror, his AI mirror.
Would you do me? I'd do me.
All right, we've lost
Jesus
many
Christ.
people that whoever didn't leave after the God rape is now gone.
That's all the. Wait, hold on. Are we talking about deities sexually assaulting people? Because that's literally the basis of Greek polytheism.
Yeah, we talked about that earlier, but yeah,
Oh,
we already.
I missed
yeah.
it.
Well, the implication that you can't leave heaven.
Yeah, you can't leave heaven because of the implication.
Oh, I
Yeah.
see.
These souls are safe, all right? There's nothing's gonna happen to them. It's the implication.
Yeah. All right.
All right, let's move on, guys. Come on. We're 2 hours in, and we got to
round?
make a stupid bet.
Stupid
I don't know.
bets, stupid
I don't know what's
bets.
bet on. What do
Who's
we bet
gonna
on?
win? Who's gonna lose?
I know.
Do we want?
All right, we got days until the first bombs are dropped on Iran.
No.
Why, you think it's just
Well,
one?
first of all, we
It's
all
just
lost the last
inevitable.
one.
Well, yeah, but how many days?
Yeah, what about the last one? I want to point out that I manually went back and searched the FOMC minutes. The words transitory, recession, and stagflation appear nowhere in them.
Nice.
Nice, yeah.
But if
they
you do
totally
see any
were.
of those three words, fucking sell everything.
You're right.
In the words of Warren Buffett, freak out and sell it all.
Yeah, we're fucked.
It's fucking over.
It's fucking over.
Warren J. Buffett.
Oh,
I don't
Jesus
know what
Christ.
his middle initial is.
Warren
It's H,
Jerome
isn't it?
Buffett.
All right. What's our stupid bet this week?
Do we
I
do
have no
Nvidia or
idea.
do we do Iran? I think that's
I
kind
want
of
to
the choices
do.
here.
I want to do now. This. Let me hear me out on this one. Jensen has had two leather jackets
Oh, yes.
since the AI bubble started. He had an original leather jacket that launched the AI bubble,
And then shiny
then
crocodile.
then around the time that Nvidia's gross margins started to narrow down and not grow at such an exponential rate, he shifted to a more expensive, uglier leather jacket that had scales. And I want to say that before the bubble bursts, I think the top signal will be Jensen's third leather jacket, which I'm hoping he reveals at this earnings call.
Do you think it'll still be black? Could we start there? Color? It's gonna be black.
It's going to be
That's
human
like,
skin, is what it is.
oh God.
That's too dark.
You just turned what I said into something extremely racist. Thanks, Dork.
No.
Yeah, he did. He did.
Oh, that wasn't my intent, but I
Well,
stand
the
by
first leather jacket was refined leather. The second leather jacket was like alligator or something.
Yeah, the first one
So I'm
was like
thinking third leather
Corinthian,
jacket
which is a
gonna.
fake word. There's no such thing as Corinthian leather. It just sounds nice. The first jacket was
Wasn't that what they put on
nice,
couches in the 60s?
Yeah, it's just there's no such thing as Corinthian leather. They just use the
I thought
word.
Corinthian leather was like non-aniline dyed leather, and then
No, there's no.
There's another kind of leather that begins with like an N. What's that one?
I don't know.
Damn it.
I'm not a leather fetishist.
You sure
So the
about
first
that?
one was just like a refined Corinthian leather, and the second one was just like I'm pretty sure it was just like a plastic snakeskin
Is he a vegan?
design. I don't know. Probably not.
Probably
Eats
not.
at Denny's. Is anything at Denny's actually vegan?
No.
Yeah.
Because the butter drips off the fans into everything.
Yeah, the grease. Yeah. The grease on the dust particles that's floating around in all of in the kitchen.
I'm gonna go with
Nubuck.
suede. Suede is Jensen's next leather jacket. Wait,
What
is this
about-
really our bet?
What leather jacket will Jensen Huang wear to burst the AI bubble? Is that what we're talking about?
Well, that might not happen this week. We gotta
Yeah,
have like
that's why I wanted to stick with earnings or bombs.
What is he gonna wear to this one?
A different leather jacket. And then
Are we
he's
even gonna
burst
know?
the
Do we get
AI
to
bubble.
see him? The earnings isn't
Nvidia's
televised,
margins,
it's just audio.
Nvidia's gross margins are going to expand by 68%, and everyone's going to freak the fuck out because they guided 72 or higher.
I was thinking we could do one on the earnings call and do like a scale of 1 to 10 on how sycophantic the people asking questions would be.
That's you can't. How do we
You can't,
measure?
yeah, you can't have a winner
sycophancy.
because it's completely up to interpretation.
The number is whatever I choose today. That's what I rate it as.
You might feel that like somebody's a 5 as a sycophant, and I might feel like they're a 10.
For example,
that's like
I feel
on what's the
I'm
best
a 10, but my wife feels I'm a 5.
Jay Fresh, you're a 9.
Thank you. I don't believe you, but thank you.
Okay,
Dork,
fine. No sycophancy.
Dork thinks you're a 5, but he'd fuck you like you were a 1.
Gross.
Yeah,
All
why
right.
don't we just do meat? Why don't we do meet, beat,
Ron's
miss?
trying to wrap this shit up. He's just like, meet, beat, miss. Like, let's get this going.
Yeah, I think it's a good idea.
It doesn't.
And then with a
tickle me
leather
down
jacket
there,
as well, in case we some of us
a
say
parlay?
the same thing.
Is that what they call it on Polymarket? A parlay?
No,
I wish to parlay.
No, straight bets only. No hedging.
Fine. Meet, beat, miss. I'll say meet.
Nvidia?
Yeah.
I'll say beat and raise Jensen Huang. You have to go miss.
Fine. I'll take
That's
it.
what he wants
I
to
wanted
do.
it anyway.
Yeah.
The beat
wanted to
and
pick- no,
raise
seriously,
machine.
I want him to miss. I want him to
Who-
still beat, but also miss.
I will also say whatever's actually interesting in NVIDIA's earnings, I know we've already beaten it to death, it's going to be in like the fine print of like all of their little circular deals and what they're investing
Nvidia's going to
in.
run to 210 overnight, and then somebody's going to read something and publish about it, and then it's going to drop to 160.
Oof. Okay.
Ooh, I like that.
You have my interest. Now you
yeah,
have my
I think
attention.
let's wrap it
Baby
up.
farms.
It's a good spot
Let's
to
end it.
end this.
Yeah,
Baby
let's do
farms
it.
are on.
Woo!